Morning, Steve Free in Chicago with the morning grain comments. Well, overnight, soybean prices about unchanged, corn and wheat are lower. Looks like the stock market is going to open lower, crude's lower, and the U.S. dollar is also lower. Yesterday, we rallied early on because of the wet weather forecast that could delay corn planting and could lower final yields of corn, and could also raise some concern about the quality of the wheat. During the session, though, there was comments out that the U.S. had come up with an aid package for farmers, and that the package included $2 a bushel for soybeans, 63 cents a bushel for wheat, and 4 cents for corn. Total package cost would be about $20 billion for U.S. farmers. The first reaction was definitely bearish to the beans. If you're a farmer and you could sell cash beans right now and get that $2 check, it would benefit you probably, bottom line, to plant more beans and less corn. The corn market did rally on to the close, but I think overnight what we're seeing is two things. Number one, there are some reports that report might be premature, that the aid package may be different than that. It says weighing so much on soybeans and not as much maybe on corn or other goods. And the second thing is that we may be a little overbought technically with this run-up in corn, beans, and wheat, and needed for a little bit of correction. Wednesday is also the day in which we get ethanol data, which is expected to show continued negative margins and slower demand because of the EPA waivers. We also tomorrow will get export sales, and the market still is expecting to see a slower demand for U.S. exports because of the lack of the China deal, and also because of big South American crops and the outlook for big European and Russian wheat crops. So usually Wednesdays are kind of a down day, trading the negative demand side of things. And Mondays are the days in which we trade weather. Yesterday there was also some reports that after day 10, we could go into a more normal weather pattern. It could be drier, but it could remain cool, especially in the northern part of the Midwest. This morning those maps look wet, going out at least 10 days. So the hardest hit areas will be the central part of the Midwest, but we're already hearing talk that Minnesota, it's got like 56% of the corn planted. They're having a rain overnight. They're going to have another rain Saturday and another rain Tuesday. So they may not get all the corn planted that they want to. The same is said about parts of Illinois and Wisconsin. We also noted that the president of China said that they are embarking on a new long march, and we must start all over again. Some people thought that the remarks were interpreted as a clear sign that China is not going to cave in on a new deal anytime soon. There was also wire services reports that some of the analysts are kind of getting together and saying that as much as 4 to 4.5 million acres of corn, 1.5 to 2 million acres of soybeans could be covered by the prevent plant insurance option this year. So that is something that we still are unknown about. If corn prices continue to rally, those farmers will try to plant corn up until the last possible day. Shifting the soybeans reduces some of their insurance payment, and the prevent plant would actually give them some kind of positive returns, especially if the USDA sends out or the U.S. sends out some kind of farm aid. So funds yesterday, there were buyers of 1,000 wheat, 37,000 corn, sellers of beans, meal, and oil. We estimate that they're still short 60,000 wheat. They've reduced their short position from 300,000 short corn to now only 140,000 short. And the key question is, will they continue to liquidate that short and eventually go long corn? And as far as beans, they're short almost 170,000 beans. So again, to me, the corn market continues to need to rally over the $4 level in the July to show the possibility of reduced production, and maybe need to buy a few corn acres from this bean market. Beans and wheat, though, is going to struggle to trade much over, let's say, the $8.75 area in the July and $5 in the wheat. We just don't have the demand, and we have too much global supply to allow those markets to rally much over those levels unless the summer weather in the United States changes and we go to a hot, dry pattern, which is not in the forecast. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.